you, as you guys can see over here, today's the topic is diversified beyond forex. This means that out of forex pairing or even out of gold, oil, those mainstream asset classes, what else can we actually look into or we can trade? And especially sometimes we just got stuck, or sometimes when the market is weird, is like out of your control. You cannot figure it out, like what's happened next. Perhaps you can think out of the box. That's something that you can continue to trade without just looking at USD, Euro, GBP, XAU, things like that. Okay, so yep, these are the things that we're going to cover. So today we're going to discuss like what is stock market index, and what is cryptocurrency market in brief. Okay, and also beside gold and oil, what else? What other commodities we can actually look into? Okay, these are the things that I can figure it out. But of course, obviously, I know recently the market has been quite volatile. Is a lot of opportunity for you guys to trade. Okay, especially gold has been crazy, but I know the dollar index as well as other pairings is a little bit boring. Okay, recently, but I know gold oil as well. Oil has been quite bullish recently. Okay, so you guys can continue to trade, but of course, like when sometime I just give you and you guys some ideas. Sometimes when the market is like dull, like boring, what else you guys can look into to trade, or even diversify your risks. We got the advice from the who Warren Buffett. He say don't put all eggs in one basket, right? So but we by saying different basket, just like continue to look into just forex, and but just trade different pairing. But why not we can diversify our risk by trading in different asset classes? Maybe that will be great, and maybe that is your cup of tea. Okay, after today's session, maybe you can try it out, and maybe even try with demo account. If it is your cup of tea, you can trade comfortably, then go ahead. Okay. So without further ado, let me introduce you the basic knowledge of what is stock market index. So I guess you guys have been trading. Definitely, you guys will come across the Dow Jones, Nasdaq, S&P. Okay, but beside that, we have like Hong Kong, we have HSI. North Japan, we have Nikkei, and also we have like the Germany index. We have FTSE 100 from UK, things like that. We have a lot of indexes. But what are these? Okay, have you guys have actually do some research on it? Okay, I just briefly introduce you what is this, and maybe you can figure out later on, right? So basically, a stock markets index is a measurement. Okay, to put into simpler word is a benchmark. So for example, when you want to assess a market, let's say give a very maybe Korea. Say let's say you want to know about Korea equities markets or the economic performance. How can you guys find out? So maybe perhaps you look at the KOSPI, the Korean stock market index. Then you can see how it performed last year and how it performed this year, how it performed last quarter, how it performed this quarter. You can get a brief idea how is this country's performance, whether it performed well or not, whether it's having a crisis or it's very superb. So this is it. This is like a measurement or an indicator that represent the overall stock market. Okay, I think it's very important for investor and then for analysts as well, and especially if you guys have been trading like a particular single stock like Apple, like Amazon, things like that. Maybe you also can use these things as a benchmark. You can compare the performance of the stocks and also the indexes, whether you are outperform or whether you are underperform. Okay, and why I introduce you guys this indexes is because it is pretty much the same homework like when you trade forex. You look at Federal Reserve, what they say. You look at their monetary policy, what they do, but you have to be aware that in a normal time, in a peaceful time, they usually go in opposite way. Yeah, they have the inverse relationship. So meaning to say, if you see the dollar is very strong, meaning to say high chance this US stock index, the markets will decline. Okay, they always have an inverse relationship. So I give you this scenario. So let's say in June, really example is this is not the real news. Okay, in June, Federal Reserve actually say we will start cutting interest rate by 50 basis point. So this is a huge news, right? So what happened? You can guess dollar index will go down. Okay, dollar, the currency will depreciate, but the equity market will be encouraged because the money become cheaper. More people can have the lesser borrowing cost and pump the money, pump the capital into the equities market, invest more. So in the hope that they can get more return. Okay, so as a result, the stock market will rebound. Will go upward. So this is the scenario. So and you guys have been doing homework, right? I guess because you don't simply just look at the chart and just trade blindly. Of course, we know most of the time we use technical analysis to do trade, but we also have to be aware of the bigger picture of the general environment in the financial markets to before we place any position, right? So like I said just now, later on we have the US CPI index, the inflation gauge. So you can guess it if later on if the CPI is very good, very high, it means that the inflation is still there. So what will happen? You can guess the dollar will appreciate, the dollar index will go high, and you can imagine Jerome Powell, the Federal Reserve chairman, he will come out to say something that the economic performance is still remain resilient, and they shall hold the interest rate at higher, even they plan to increase or lift the interest rate and maybe for longer. So no more June rate cut. Maybe you'll postpone to July, September, or October. And if he says something like that, you can imagine what's going to happen to the equity market. The equity market, a high chance will drop. Okay, because the money will just become more expensive, higher cost of borrowing, and the money itself will just channel it to save up to gain this 5.5 interest rate, risk-free rate. You don't need to risk your money. You can get this kind of return. So this is the example. Okay, you guys have been doing homework. I guess it is like very easy for you guys to trade in a stock market index. And another example is, if you look at the chart over here, let's see. Okay, if you zoom out, you can see over the course of since 2003, 2004, it has been superb. It has been very, very good. Okay, I see Didin asked what is US 30. So Dow Jones, we normally say Dow Jones is Dow Jones 30. So US 30 normally refer to Dow Jones. And then for the Nasdaq is always 100. So maybe sometimes you see something like US 100 that refer to Nasdaq. And then S&P 500. Then if you see US 500, then it's S&P. Okay, I think it's a bit out of topic. Okay, so you definitely want to catch this opportunity, right? You just close two eyes and then you trade on the index for since 2003. I think most of the time, if you place a long position, a high chance you're going to make profit from it. And especially like and then also what's coming up next? I know it's like very, very high now. It's like all-time high. All these indexes. Okay, even US 30. Let's see. See, all like now trading to its all-time high. But you guess what's going to happen after June? If really the Federal Reserve start cutting interest rate, money will just become cheaper. And then you can imagine more and more fund will just bump into the equities market, buy it out. And then recently we have the NVIDIA, we have the AI rally, everything's just gone crazy. Those are, related to AI, related to chip making, related to tech, all rebound, but of course not including Tesla. I know Tesla recently doing badly. Okay. And you definitely don't want to miss out the chance. You can actually try because you already do your homework, right? You see the market, you see what Jerome Powell say, you look at the Federal Reserve, you look at the dollar index, and dollar index and those equities market index, they have the inverse relationship. So this is a thing that you can try. Okay. Okay, so what is the benefits of trading on indexes? The first thing will be the diversification. So one good good advantage of trading the market indexes, because it is a group that you talk about US 30. So Dow Jones 30 is the combination of 30 component, 30 stock, and they group up, they divide, they have the weightage. Of course, you can check online that how they come up with this number, with this index. They divide and then they get this number. So meaning to say, if you if you trade on Dow Jones, it means that you simultaneously trade with 30 counter, 30 stock. And if you trade on Nasdaq 100, it means like 100 counter, 100 component in the index. So at the same time, you are trading in 100 counter at the same time. So I think this is also a kind of a diversification. It is not like 100% diversification, but you can take it this way. This is one of the advantage if you trade on indexes. Second thing is liquidity. So if you you have to compare it with like a single stocks, maybe some of the stock that you can never you never heard of, you never come across, then you can imagine less people will buy, less people will sell, and then it will be illiquid. But if you talk about the indexes that is very famous in the world, the one that we say the US indexes, Hong Kong indexes, the HSI, Nikkei, and then Nikkei, because the Japanese yen has been very, very cheap. The interest rate has been zero, right, in Japan. So you can imagine the Japanese yen is very, very cheap. So where the Japanese put their money into the Nikkei. So if you're aware, Nikkei is also trading at its all-time high. Okay, so this is also one of the opportunities you can go. And if you look at those very famous, well-known indexes, they are very liquid. So there's no risk of liquidity. Okay, this is one of it, and it's very transparent. Especially, of course, I know our Forex is also very transparent. Gold is also transparent. But if you compare index compared to crypto, if you compare to single stock, it is very transparent because you already know the method they use to come up with the index, how they calculate the index is already there, and there's a number. The transparency is there, so there's no any hidden thing. There's no any scandal, any under table stuff like that. It's very transparent. You can just look at the price. You look at the policy. You look at the general economy. Then you can try to trade on it. And second thing is passive investment. So it's also, this is compared to like, I'm not sure how many of you guys here love to trade on stock. So if you trade on a particular single stock, let's say Amazon, maybe you have to look at the annual report. When we need to look at what Jeff Bezos is going to say, what is the business plan for the next 3 years, 5 years. Are they doing well? You have to look at their account. Are they earning more money? Are they growing? Things like that. Where are they expanding? Are they building this factory? Are they expanding business in, I don't know, India, whatsoever? So you have to do research one by one. But if you really like trade, not trade, I would say invest in those indexes. If you buy those ETF, okay, that would be a kind of passive investment, because the body, the Nasdaq body, the Dow Jones body, they look at those components because it's interchangeable. If they see this stock is not really performing, it cannot represent the entire market. They cannot represent the US economy. So maybe they will replace it with other stock. So no people do the job for you. So if you look at the index, it's like you can invest passively. You don't need to put too much of effort into it. Okay, so this is the beauty of it when you trade on index. But if you want to talk about all these advantages, It's more on you invest on it rather than you trade on it, because when you trade on this, it's a day of thing, it's a week of thing. You cannot pretty much enjoy all the advantage that I mentioned over here. Okay, basically you just play with the number up and down, you long or you short. Okay. So when if you really want to trade on the indexes, what are the things that you want to take into account? You want to consider what are the factor that will have an impact on the indexes. First is definitely the market's condition. So whether this market is in a very bullish or is very bearish. Okay, I can give you one extreme example here. US equity market has been quite bullish. You can see the chat just now. The opposite will be the China equities market. Okay, maybe I'll just share with you the HSI. Okay, you can see the difference. Okay, HSI has been going down, but just now the US 130 has been going up. So before you trade into the indexes, you can zoom out and see the entire trend, where it is heading up or heading down. So you have to know whether or not this economy is doing well or doing badly, and what's the the sentiments in the market. Okay, and you have to take notes that now the US is having a very high interest rate level. Okay, in a normal time, like in the past, when a country have a very high interest rate, it means that it will harm the equity market. But if you look at the US equity market now, you will you have like mind blown. What even if when the Federal Reserve start cutting rates, will it even go higher, or will it just crash like bubble burst? Okay, that is, I don't know. We have to wait and see in 2025. Let's see any bubble burst, or you will just crazily gone up like there's no tomorrow, like sky is the limit. That could be possible. Imagine from 5% of interest rate cut to 2% or 3%, the money will be like half, like 50% discount. Okay, meaning the money, the fund that you can borrow from the bank or from anybody is like 50% discount, cheap, all pump into equities market. You can imagine what's happened next. Okay, and this is the market condition. You have to look in the general markets, what happens in the markets. And second is the volatility. So every index have a different volatility. So if you compare the US equities market and the UK equity market, and maybe Singapore equities market, they have different volatility. US one day can go like 300 point, 700 point, 1000 point. But it's not the same in the UK. UK maybe just like 100 point, 50 point, 150 point. And maybe in Singapore, it's even worse, like 10 point, 15 point, 50 point. Because I think Singapore is like highly regulated by the government. So that's why it's not so, the volatility is not so high, because it's not like 100% free markets where demand and supply matters. So different market have a different volatility, and also should all of you, if you guys are like have a very high risk appetite, then you can go for the US equity market. If you have like a moderate, then you can consider the German index, and also maybe Hong Kong index or UK index. And if you don't like risk, then maybe you can go for a Singapore index, for example. We have many indexes around the world. Then you can find it out. And you yourself, your country, I guess every country has one stock market, have the indexes. Then maybe you can look into it and see the volatility, whether it's high or low, and then whether should your risk appetite. The third one is trading hours. I know you guys here is come from all around the world. I think we have audience here from the America continent, have from the Euro continent. Just now, I remember someone from Canada just say hi. So you have to be aware that the trading hour in every country is different. So and then also you have to take notes that those how to say, the operating hours for all the equities market is different. So for example, the US equity market is going to open soon, and you can expect the volatility during this hour will be higher than when the American go to the bed. then of course, obviously, the movement of the index will not be so high if you're talking about the futures. Okay, so you have to be aware of that. You have to see where you come from, the time zone, and then you apply accordingly. Usually, when the market is open, it will be more volatile. It will be the fluctuation will be higher. And usually, when the market is closed, when you look at the futures, it will not move as much as compared to when the market is open. Okay, and then the fourth point is economic and political news. Okay, this is definitely the things that will drive the equities market up or down. So let's say we have like trade war, from China between US, then you can guess what's going to happen. Will you have a very bad impact on the China equity index, or you will have a very bad index bad impact on the US equity markets. And also remember, I think in October or November, we will have the general election in the US. So maybe Donald Trump will come back, take the throne, become the president. And what is the implication on the equities market? Let the market to decide. So you also have to be aware, even though you are not trading on it, you have to look at those economic and also political news that will have a very, very direct impact on the index performance. Okay, so these are the things that you have to consider when you want to trade on the indexes or the futures. Nursha Mimi asks, index more volatile than currency? That's depend. And also depends on what currency you trade. If let's say you trade on Swiss franc, then it will not be as volatile as you trade in something like pound sterling or the euro. And also depends on what index you're looking at. Just like I mentioned, US will be quite volatile. It can be like 1%, 5% change in one day. And whereas the UK indexes or the Singapore indexes will not so much. That will depend. Okay, moving on. What is crypto markets? So I know this is the new darling. It has been quite volatile. It has been very, very volatile. But of course, I'm not a crypto expert. I'm not here to discuss with you what is blockchain, how is the how to mine Bitcoin and things like that. But for me, it is a currency. It is the currency in the digital world. It's for the use for people online or the web 3.0. Things like that. I don't go to see like how it invented things like that, how to use it like really. So and also to be honest, I'm not very familiar, 100% familiar with the cryptocurrency market, but I just give you a brief idea and what you can look at. Okay, but of course we don't want to miss out the chance, because you guys know can give you guys an example. I think in the end of 2022, the BTC was just like $16,000 per BTC, and guess what? Now it's 70,000 per USD. You can count like how many 100% it increased over a year and a half. It is crazy, and then if you trade on CFD, if you use leverage, you can imagine if you catch the right trend, how profitable it could be. So for me, what is cryptocurrency? It is just a digital asset that has value and is decentralized. So no involving in any government. Okay, meaning to say, like Federal Reserve, they have sort of some control over USD, and then the BOE will have some control over the pound sterling. But for Bitcoin, for Ethereum, they have no a central bank that can control the value. So it purely depends on the market to decide. Purely depend on the demand and supply in the market to have its value. So that's decentralized. Okay. And what is very key is every cryptocurrency have a limited supply. And for you guys to know, for BTC itself, I think it's already more than 90%. If I'm not mistaken, I think it's 95% of BTC in the world is being mined. So only left 5%, I guess. So when there is like a limited supply only that will have a value on it. If you can come up with multiple BTC, then I think the BTC will worth like nothing. Okay, you can simply print yourself, you can simply mine yourself, then the value of BTC is mean nothing. So only when there is like a limited supply, only there's a value for the currency, I mean for this asset. Okay, these are the three key characteristic for cryptocurrency. Okay, for BTC, for Ethereum, it is intangible. There's no cash, there's no note. It's intangible, it cannot see, cannot touch, and it's decentralized. And very, very importantly, it is limited supply. So, what are the factors that you have to consider when you trade on the cryptocurrency? Okay, I think it's slightly different if you trade on Forex. Okay, it is slightly different for you to, like, example, you trade on the indexes. First of all, the market volatility. It is so volatile that you cannot compare to any other asset class. Okay, I can give you some example. Okay, this is the BTC. Of course, you know this is like one day. You can see how see one day is I have like 5,000 changes. Okay, I think this is not very easy to see. Maybe I just give you some very odd coin that I can I can found. Okay, this is the coin that was just newly launched. I think since 4th of April, and you can see the volatility of this coin. It is like 220%. So this 220% is the coin itself. Imagine if you trade with leverage, 500 or 100 leverage. Okay, how huge, how big difference it could be. Of course, if you trade on the correct trend, then congratulations, you can retire earlier. Okay, you are like, you earn yourself a financial freedom. But touch wood, if you catch the wrong trend, is like you catching the knife on your hand, right? Okay, another example. And also, obviously, these are the odd coin. Okay, yeah, I see you don't omit this tail. Yeah, this tail is also super long. Okay, you can see the price difference from day one to now. Okay, this is still okay. This is just 50% different. But within how many days? 1, 2, 3, 4, 5, 6, 7. Just 1 week. 1 week have 50% different. It is very, very crazy. Again, it will amplify your profit and loss if you trade on leverage. It is like super, super crazy. And this is another example. Okay, you can see how volatile it could be. Like drop like there's no tomorrow. Okay, from early to now, like 85% of drop. Of course, if you short it, then it is good. It's like you just hit a lottery. But if you trade on the wrong trend, then I mean only God can save you, right? Okay, so these are the things that is very, very crucial to understand. The market volatility in the crypto markets, and you compare it to other asset classes, it's totally different story. You have to be aware of it. Okay. And this is a time where you have to definitely do your risk management very well. You have to set your stop loss and take profit. Because even like, for example, if you don't take profit, you want just let the bullet, let it fly for longer. Maybe the next day when you wake up from your sleep, it's like a totally different story already. You have, like 100% U-turn. Okay, for example, the BTC that we see just now. You can see over here, for example, let's say you catch a correct trend, it's like rebound from the liquidity zone and rebound. And imagine you think it's very, very strong, it's very, very bullish, and then you didn't set a TP. Okay, a few days later, it's a different story. It can come all the way down again. Yeah, I think maybe for some of you guys here, maybe say, oh, it's very similar to gold or very similar to any pair that you trade. But I would say it's more extreme. Okay, you have to definitely be aware of it. Okay, obviously it's the regulatory environment. Okay, so for example, you guys know, I think since last year, people talk about the the US governing body, the commission, the Securities Commission, they want whether or not they allow the BTC ETF to be launched by all these big financial institution. So these are the regulation thing. So you can see after it allows. So what's happened? You can see on BTC it fly from from like 30,000 to 70,000, like more than double. Okay. What is regulated now is in China. China government does not allow BTC. Okay, they don't recognize crypto. So if imagine one day the Chinese government allowed it, they recognize this cryptocurrency, and you have like 1.4 billion come to trade in the crypto market. You can imagine how many billions going to pump into this crypto market, and then this different story. And maybe I don't know when there's a time there's a crisis, or maybe the government, like even the US government or the European government, they want to set a higher, I don't know, any rules and regulations on the cryptocurrency, and you can see it will be very harmful for the crypto markets. Okay, regulatory environment is key things that you have to consider when trading in crypto markets. Okay. But for me, I'm not sure like all of you on your risk in terms of risk appetite. So my advice is please trade if you want to trade on cryptocurrency. Please trade on those that are not mainstream, like Bitcoin, like Ethereum, like XRP, okay, things like that. You don't go for all the memes coin, okay, all the altcoin that's high chance is like a scam and you cannot get out of it. Like suddenly the next day everything crash and the value came from $1 to 1 cent. That could be possible because like it's not very highly regulated. So to save your fund, to save your capital, perhaps you trade on this, or mainstream token will be a better choice for you. Okay. And then next, the market sentiments and news. Okay. Also a good example is like if you guys know about FTX. So it happens in the end of 2022. Okay, I think there's a fraud. Okay, from this Bankman-Fried, Sam Bankman-Fried fraud, few, I think tens of billions. So this make the people, the traders, the credibility drop in the crypto market. People don't believe in this system anymore. Thinks that it's like a lot of fraud, easily got scammed. So it's bad for the crypto market. And then the next thing I think is from the Binance CEO, CZ. So he admitted the guilty, okay, on money laundering, things like that. So this have like a bad impact. The market sentiments, the news is not good. It will also impact the crypto markets. So last time in the past, before the ETF, things like what happened, what Jerome Powell say, what the US economic performance, they like less likely going to have an impact on the crypto markets, because this is like decoupled from the traditional financial market. For the crypto markets is slightly different from what you trade previously. And also again, the liquidity, just like I said, I advise you guys to trade on mainstream coin. Why don't trade on the altcoin? Because of the liquidity. Because when the BTC is very famous, everyone know about BTC. It's easier for you to buy and sell. Okay, if you come up with some coin that I don't even know, like I just know a cup coin, a coffee coin, I don't know. It is like nobody know what is this, then is the liquidity will be very, very low. It's hard for you to buy and sell. Okay, so yep, this is one of the things that you can consider to trade like cryptocurrency. I think if you guys know what is a halving event, I think it's come pretty soon. I think in 9 days. So halving event is like the reward for you to mine a big Bitcoin. The reward is half. Okay, 50% cut. So you can imagine it will have an impact on the supply. And I don't know the implication, but I think it will be positive for the BTC prices, because I just believe that when the supply is lesser, then I expect the value to be appreciate. So this is why, but I know it can be otherwise. Okay, but it is in 9 days. Perhaps you guys can have a look at it and see how things goes. Okay, last, yeah. What are some of the commodities you can look into beside gold and oil? To be honest, this is because I came across the news about cocoa. So cocoa trade to all-time high, cross over 10,000 10,000 USD per, I don't know, per ton. Okay, so I think last week there was the news. Okay, so that's why I come up with this idea. Maybe I can share with you guys what are the things that we can trade, we can look into. Okay, first thing definitely is cocoa. So just show you the chart of the cocoa. You can see the chart over here. It's been superb. I know even me myself, I don't look at cocoa every day. So when I look at the chart here, I got shocked. You can see this is like from 2024. How many percent is it fly? About 150%. It increased 150%. It has been crazy. So what are the news behind it? What makes this cocoa price to go to this high? Okay, it is mainly because of the supply. So I don't know like how many of you enjoy chocolate. Me myself enjoy chocolate very, very much. But unfortunately, maybe end of this year, maybe next year, we will have very, very expensive chocolate to consume. Why is because us in the world we are facing the worst cocoa deficit ever in history because of the weather, because people from these cocoa export country, they harvest less cocoa. That's why we are lacking a lot of cocoa. That's why it leads to this price. It gained more than 150% since the beginning of 2024. And guess what? From strategies, okay, from people who have knowledge, they think this is still not the worst case yet. Worse is going to to come. So meaning to say there's still room to go. If you want to have if you want to have someone to buy you a chocolate, maybe you can trade on cocoa. Okay, meaning to say it can even go beyond 10,000 mark, and I don't know, next level is 11,000. You can have a look at it. You can trade on it, the cocoa. Okay. Next is gasoline. Okay. Gasoline is a refined product from oil. So it is easier if you guys have been trading oil, if you have been, follow the Apex news. So maybe gasoline is easy for you to trade because this is something that you can understand. If you can understand, you can trade on oil. I think it's easy for you to trade on gasoline as well. Okay, let's see. Because the trend is also has been quite bullish since 2024. Okay, so let's see how many percent it jumped. It jumped by about nearly 40% since the beginning of 2024. Okay, and then we know what now. Because we still have this geopolitical, we have war between Hamas and the Israel. So this will definitely have an impact on the gasoline supply. And also we know Russia is one of the biggest gasoline exporter. So I recently come across a news say Russia is importing oil from Belarus, meaning they are lacking of gasoline. Okay, so with all these news, you can imagine the gasoline, the prices still have room to grow. I don't know how high could it be. Okay, I think, yep, it is still trade in a very, very bullish trend. Okay, these are the things that you can look into. Okay, the next one is cotton. Cotton is also quite good, and because I think it's very similar to cocoa because of the bad weather, because we have the global warming issue, right? So it is hard for people to grow cotton, so the cotton supply is lacking. That's why I can see the cotton price is also volatile. Previously, have a very strong rebound since 2024. I think nearly 30% as well, but then quickly retrace. Okay, this is because I think I came across the news to say they expect the supply to come back in this year, but let's see. But in general, we have a very bad weather, so we have a limited cotton supply as well. And also we have the political issue. We have China cotton is banned by a lot of country because of the human right issue. But I don't know in details. So these are the things that will also have an impact on the cotton price as well. Lastly is the natural gas. So natural gas is also a kind of energy, and then you see it drop drastically in 2024, but I think it found a support level over here. Okay, we have a double bottom here already, and it's rebounding from here. Whether or not it will go beyond this support level, let's see. And then just happen we have it's a $2 psychological resistance level. Let's see whether or not it will go beyond here. But natural gas is like an energy, and then we know it is widely used, especially in during winter. So now winter is over, we're getting into April. So the demand for natural gas is logically will be declining. So let's see. And also the inventory is seemingly going to pick up. This is from the US data. Okay, they have like an inventory data, right? So they foresee that the natural gas inventory will pick up after March. So perhaps here will be a strong resistance that the natural gas cannot go beyond, and then maybe we'll just come back from here like this. Let's see. Yeah, so these are the things that you can look into, because I filter up all these commodities. I see these four have a higher volatility. It's not so boring to trade. So sometimes when you have no idea the direction for gold, no direction for the oil, perhaps these are the commodities you can look into. But of course, out there's still a lot of different commodities. We have like orange juice, we have barley, we have wheat, all these things. We have corn maybe. So all these commodities you also can look into if you are the expert of it. If you trade on it, you feel comfortable, then yeah, go ahead. Okay. Yep, here we come to the end of the today's webinar.